do you guys use any outside data to better inform your modeling? And what I mean by that, and I think you kind of answered that earlier, Chris, it's just like, there are some other developments, and Eric as well, that this information is now out there, whether it's your client's past developments as well. And maybe they had internal models that kind of went awry, post development, and some of the numbers were off. And, it's always good to go back and kind of underwrite that and go, okay, well, what did we do wrong here? How do we better improve projects? So that's one part. The other part is then, there's also a lot of, I guess, newer technology that's coming out that's kind of, even in construction tech, where they're better communicating, or, there's less time on projects or more efficiency in the project, or even prefab, right? Like modular. I know we're still a little ways off where that's going to be standardized, but I know even locally here, they're finally doing some all steel type 1 modular builds. And I know that's kind of crazy to think about, but I think some other countries have led in that type of technology. So backing that into financial modeling, is that kind of developer led or client led? So like if the client wants to start to deploy those type of technologies as cost savers, right? Do you guys kind of use that? And then also, again, the first part was just outside data, whether it's from the client's past development or just comps that you were privy to for developments in that area.
Yeah, exactly. And I'll touch on the data side of it. The best data is going to be your own data, right? And so, internally, we have a database for every property type that we've ever done, right? So we've done, hundreds of deals. And so we know, hey, when we're modeling a deal, usually the assumptions do come from the developers, right? Because they know, they have their contractors, they know their local market, and they know, they've done this before usually. So they kind of know what their pricing is going to be. Our role in that is to, okay, hey, we're going to take their assumptions, and we're not going to just blindly, take their assumptions. We're going into, okay, let's compare what you're saying, the cost of lumber is, or what your hard costs or soft costs, or, getting into your engineering fees or your grading fees or whatever it may be. We're going to compare that, line item by line item to all the other deals we've done that are similar to the current project, right? And then if there's something that's, awry, then obviously we're going to bring it up to the client and say, hey, you're assuming this. Most of our clients, granted, they may be in different cities and states, and maybe different projects, but they use this other assumption, right? You're kind of out of the fairway a little bit on those assumptions, and so that that adds a lot of value, right? But ultimately, it is the developer's assumptions, right? They it's whatever they're comfortable with and whatever they think they can get. Maybe they got a bit good deal from some relationship or something, but that's that. As far as like market data, we use CoStar on especially for multifamily and for office, rent comps and sale comps. And again, it really depends on the city, right? And kind of the submarket within those cities. So, a lot of times, you may be calling or have relationships with brokers, in those particular submarkets, and you can call them. I usually think they're going to be the best source because they know what deals are happening and what tenants signed up for, what lease rates and things like that, and what things traded for. Having those relationships with brokers and calling them and making sure that kind of whatever your client is assuming or whatever you're assuming in your model is in line with that particular market and submarket.
And yeah, to that point, CoStar it's not a cheap product. And so if there's smaller developers out there that don't want to front that bill, there's less sophisticated ways, so to speak, that you can get market data. You can look at, apartments.com and see what other things are renting out for. You go on Zillow, Redfin, look at for condos in particular, what are they selling for? So there's other options out there, but they're not going to be as sophisticated. They're not going to give you all that market data that you can get from your 150-page CoStar report that'll tell you everything you could possibly want and more. As far as your other question, kind of surrounding technology and prefab and that sort of thing, we've actually consulted a guy down in Austin that built a prefab apartment complex, and they were able to sell out of it, and I think they sold it out even before construction was complete. It was a hugely successful project, one of the first ones I think here in all of Texas. One of the issues that I think we see with people that want to get into these new technologies is kind of going back to what I was saying at the beginning, where the industry as a whole is a bit archaic in how it approaches things. And so if you have an exciting new technology, that's great, but you have to get your investors to sign up for it. And that's a difficult thing when your investors are used to, something very vanilla, something that they've been used to for 50, 60, 70 years. And so you have to start getting creative with how you're pitching them, creative with who your investor base is. And, there's some cool regulations and stuff out there that help you with your raising. But even from the debt side of things, if you're a new entry into a market of prefab, it's going to probably be more difficult to get a loan on your prefab versus what your banks, your regional banks have all been accustomed to historically. So sometimes you might have to go with a smaller bank, someone that is more willing to take that risk versus your big guys that you would usually go for.
Yeah, that's a great point.